All right, people, I know that it's really late. I got you. I have a really cool SoFi video. It's not actually me talking, it's TD Ameritrade. They have two videos on SoFi, two analysts' videos. One is them actually analyzing SoFi being the new godfather of fintech, which is absolutely amazing. They basically explain what SoFi is, why it's growing, so on and so forth. And right after that, as you know, we were downgraded by three analysts, but one analyst has all the right things to say about SoFi and fintech in general. He's going to talk about SoFi mainly, and then he's going to talk a little bit about Block as well and Robinhood. Guys, I hope you guys enjoy this. Um, as there's some really cool interviews, I like to bring this to your attention. Some people get to watch this, but a lot of people miss the mainstream media. And when mainstream media covers one of my stocks, I really want to make sure that my subscribers sees these videos. Thank you. Have a great evening.
Want to take a closer look at the fintech group. I mean, we're watching SoFi in particular, which has run up. Just in 1 month, it's up over 75%. But now a lot of analyst downgrades. Dan Dolev, senior fintech equity research analyst at Mizuho Americas, has a buy rating. The bears are mathematically and intellectually off. Buy on weakness, he says. All right, can you explain this? First of all, we got to give you credit, Dan Dolev. You were the one who called Square a long, long time ago when Square took off. Since then, it's had a lot of volatility and all that, but you did call that big move that we saw to a winning point. What's going on with SoFi here?
Hey, Nicole, how are you? And you remember, and thank you for remembering all of that. And also, we called Coinbase at the peak all the way down to where it is today when it was at $300. Okay. So we can also call shorts. But let's talk SoFi. I think that look, the stock's up 80, as you said, like the stock's up 83% year to date, and I can see that there is some fast money. I would think it's like fast money profit taking on it. If you kind of want to like counter the key fears on SoFi, one, that they can't sell their loans, that's mathematically wrong. And this is what we said: they're earning 6.4% on their loans. Why should they sell them for 5%? People are worried about accounting change. That never happens, and then people are worried about a disclosure that they might have to, they might have to like issue shares, which has been like it's been there since like the since like the S1. So all these things are completely wrong. And I think what you're seeing today is just some profit taking and fast money.
I remember talking about SoFi with you some time ago. I mean, I'll venture to say it was probably about a year and a half ago. And you liked it then, because I remember sort of taking note on the heels of our other conversations that it might be worth paying attention to. And, it's had some volatility. It had a big run up. It's had a lot of volatility over time. I mean, it's certainly far, far away from the $25, $28 days. Where would you buy it, and where would you start to take some profits? Do you have a range?
I mean, we have a $9 price target, but I would be a buyer of it any day. And let me tell you why. SoFi is one of those unique cases where all the bad news are sort of priced in, but none of the good news. Let me just explain that. People were worried about personal loan delinquencies. I mean, those personal loans are performing really well. People are worried about their, mortgage origination. We're probably closer to a recovery in mortgages than we're to a decline in mortgages. And then last, people are worried about the student loans. Now we have a date, which is part of the, part of the debt deal. We have a date for the end of the student loan moratorium. So all those bad news are priced in, but none of the good news. So I think that, it's not where it was at 28, but think about it, like pretty much every fintech, every tech has traded down since sort of those COVID heights. It's almost hard to compare today to 2021.
Well, let me pick your brain. I mean, you cover a lot of names, the world of fintech and more. I mean, what are some of your favorites these days and why?
I really, really, really like Affirm. We just met with Max Levchin last week, and I'm super, super excited about what I'm hearing. So they have a new product. It's called Debit Plus. Basically, it's a hybrid debit card and also buy now, pay later. So like a 2-in-1, which gets Affirm into everyday spend. So if you think about Affirm, you're thinking, let's check out online, on Amazon. But what Affirm is doing now with that Debit Plus, they're actually getting into everyday spend. So you could literally do a buy now, pay later with, buying a can of Coca-Cola, right? So that gives them just enormous penetration of the in-person market. That's one thing. The other thing that I'm excited about is like they're leveraging their data to continue to come up with even perfecting the delinquencies and making them lower and lower. They get tens of millions of data points every quarter, and no one's better at those data points than Affirm is. So I'm super excited about Affirm. I'm also extremely excited about Robinhood, as always. I met with Vlad, the founder, last week as well. We had a busy week last week. And what Vlad was telling me is that, they're just at the beginning of getting into retirement, right? Into Europe, right? There's just a lot more that they can do. And,
Yeah, before I let
Yeah.
you go, just Square too, can you touch on that? Since right now it's at $67. What are you thinking about Square these days?
I'm still very, very upbeat about Square. I think they've had the issue with Square is people are worried about the share loss in their point of sale because there's new companies like Toast that are doing really well, or Clover, which is owned by Fiserv. But if you think about the commentary that the CFO made, there's been an acceleration in May versus April, even though Visa volumes in the US were flat, which means that there's signs of that execution or the work that they've done starting to work again. So I think Square could actually end the year much higher where it is today.
Wow. I mean, what does much higher mean? Now I have to ask.
I mean, it could go to the 70s, 80s. I mean, I think that if they can prove the acceleration in the point of sale business, everyone's going to be buying the stock.
Dan Dolev, always great to see you, my friend. Thank you, of Mizuho Americas. Thanks, Dan.
112 for FOMO. So we are looking at Sofi Technologies here, Alex, with shares up 112% now year to date. They're up 41% this month and almost 20% for the week.
Yeah, one of these sort of new age fintech companies, a lot of hype around it, has some meme stock elements at times around it. Maybe had a little bit of the stadium curse as well. I think a big name on the LA football team stadiums as well. Super Bowl played there, of course, but doing pretty good recently. Parabolic move, much like what we've seen in Palantir, names like Tesla, and names like NVIDIA. But not all of them created equal, Jenny. There's got to be news behind this, right?
There is news behind it. And I will say, I talked about an earlier note this week out of Truist, and I was not as optimistic as perhaps the analyst was, and I got absolutely torn apart on the internet because this name has its strong believers. And I think for that reason, this name, with so much scrutiny right now and so much focus on SoFi, we are seeing a lot more analysts come and update their coverage on this name. But nothing but positivity today out of BTIG, calling the company a top pick among their financial technology companies. They did assume coverage with a buy rating and a $14 price target, which is higher than the average price target among analysts, which stands around $8 right now. They said that the shares, with the fact that we have seen a nice lift, this is already on top of the fact that the stock has climbed over 100% this year. But despite even that rally, BTIG analysts said that SoFi is cheap compared to its peers based on its price to tangible book value, which is around $270. The analyst did note that SoFi's strong growth in members, its financial services products, and its aim to achieve profitability, which they anticipate the company will achieve in the fourth quarter of 2023. And I actually learned something there because the company is still guiding for profitability in their fourth quarter. I had previously misspoken, and actually they have outlined a pretty strong path to profitability that will be coming very soon, at least per management and per a lot of these analysts. So I stood corrected. I was not saying this was not the future of finance. I'm not sure if you can necessarily make that claim, but I have looked into a lot of their balance sheet and their financials, and actually was surprised to the upside with a name like SoFi. Now, this name has seen their loan origination volume fall about 47% as of last quarter. So that's another area of strength that has been overwhelmingly agreed upon among analysts, that once we see these student loan payments resume again, this name will be a huge beneficiary of that because that's 47% of their volume that was lost that could be expected to then be regained. So another area of strength, but this name, I mean, just in a really, really impressive rally, like I said, surging on the week, still down about 4% from its 52-week high. You zoom out, we are not close to all-time highs, but I definitely think when looking at this name, there's a FOMO feeling to the upside, and you've missed the rally if you've now been a part of this name just over the last 2 weeks, with shares up now 131% off their 52-week low.
Yeah, and I'll get to a trade illustration with that in mind just a second. A couple thoughts on this, though. You talked about the student loan kind of moratorium at least being perceived to be over now. At least there's a finite end and an agreement in place to get that back up and running. This is a company that would typically benefit from sort of action being taken within that, maybe refinances away from other sources, maybe into something like SoFi. But with rates so high, there may not be incentive right now to actually refinance some of those different loans that are outstanding that maybe have been sort of paused in payment. So that might be something to watch. But you mentioned about loan origination. Personal loan growth has been a huge strength for them, offsetting a lot of that weakness. But the one thing that hasn't really been stressed or tested yet for this company is what happens in a downturn economically. This isn't perceived as the most stable, highest necessarily credit. A lot of times this is younger borrowers. And so if you do have substantial recessionary time frame, deterioration in the economy, potentially uptick in unemployment rate, what is that going to mean for SoFi? How stable is their, exposure on the credit risk side? Because it hasn't been tested. And so the stock's obviously lost a ton of value, Jenny, but I think there is question marks as to, how exposed is this company potentially in an economic downturn? But those are questions that we won't have answered until if and when that ever happens.
That's such a good point, because I think that if this company were to endure a recession, what do their credit losses look like? What do things look like when the overall market continues to go south? Because to me, to say the company is the future of U.S. banking, you need stability to then be able to say you are truly the future of U.S. banking. But again, that is a wait and see situation, Alex, just something that I'm keeping on my radar going forward. But now trading this name here, shares are getting a nice lift today. They're up about 2.6%. Like I mentioned, having a really nice couple of trading sessions. And there are, I definitely say, a choir of bullish analysts right now praising this name, just given its positioning with these student loans resuming.
Yeah, no doubt. And the analyst in particular that we were referring to today that likes this name, I believe, had a $14 price target for SoFi. And so just holding that in mind, I mean, yeah, it'd be a massive rally upwards of 40%, but this stock can move in a hurry, and it's proven that. And so if you believe that that's possible, maybe by the middle of August or so, I looked at a strategy that would benefit from that. July, August, 14 call calendar. This is a name that right now, I guess George would talk to us a little bit about sort of investing stocks versus trading stocks. And I wouldn't put words into his mouth, but I could say that with the volatility that's surrounding this name, at least right now, you can certainly see the attraction someone may have from a trading standpoint. Not to get into the specifics on whether or not it's a positive or not an investment vehicle, but just from a trading standpoint, anytime a stock is moving around as much as this one has recently, it's going to garner attention. It certainly has. And so looking at a strategy that is relatively speculative in what it was asking for the stock to do, but doing so in a very controlled risk way, only taking $20 in risk on this for an upside shot at around 14 rather, for that strike here on the call calendar. The beauty of this is very customizable. You got a different opinion, different outlook, different price target. As long as there's strike availability, you can act on that in that way. But with this one, Jenny, I just looked at the analyst price target, simply use that for the benchmark here on this one. But really, we talked about it every time we've looked at these kind of calendar spreads. It's more about precision, more about accurately projecting the stock price and where it'll be, throughout the duration of this particular trade, as opposed to directionally being right or wrong.
Yeah, I think that's really well put. And of course, considers the fact that this is a volatile name in nature. It has swung to massive heights as of late, but of course it had been beaten down pretty significantly over the last 12 months. But we will leave it there for FOMO.